Welcome back, investors, to Ticker Time News. I'm Adam, and Upstart was up to start the day after beating EPS and revenue from its earnings report. Probably even more importantly, the company issued upside revenue guidance for Q1, which is typically a slower period of time because of the seasonal change. In other great news, Upstart, which provides an artificial intelligence-based lending platform for banks, also announced a $400 million buyback authorization. That will help the stock to appreciate over time as they buy back more of their own shares. Now, this stock has been on a roller coaster ride since making its IPO debut back in December of 2020 at its IPO price of $20 a share. Then it ran up to over $400 a share by October 2021 before falling back down to earth at $109 a share earlier this week. With concerns that rising interest rates could tamper consumer demand for loans, anxiety over rising consumer defaults, jitters about Upstart entering a brand new market from scratch, auto loans, and the tech sell-off have all taken a big toll on the stock in recent months. But Q4. Q4 earnings. Now, before I dive too deeply into Upstart's earnings report, smash that like button, share this video, and click the first link in the description to get our top 10 stocks list and so much more. Thank you, my friends, for doing that. Now, Q4, Upstart reported adjusted EPS and revenue well ahead of expectations. Revenue jumped 252% year over year to $305 million. Upstart also guided above expectations for both Q1 and for the full fiscal year 2022. And that's not all. There were even more positive operating metrics. Bank partners originated 495,205 loans, totaling $4.1 billion across its entire platform for Q4, up a whopping 301% year over year. And that's important given Upstart's revenue structure. Rather than making money off subscriptions, Upstart earns 96% of its revenue from loan fees. And that can lead to volatility if loan demand declines. And rising interest rates, they will dampen consumer demand for loans. Upstart mainly focuses on personal loans, but a key development has been its expansion into the potentially lucrative $1 trillion auto loan market. Upstart does concede that scaling the auto business is no simple task, as distribution channels and auto refinance channels are not nearly as well established as they are in the personal lending space. The good news is that Upstart has a unique and proprietary auto refinance product with far less competition than it faced in the personal lending space. Auto loan creations are now ramping up quickly. This will be an area to watch for 2022 for Upstart. The idea behind Upstart is definitely intriguing. Namely, it helps banks expand the auto decision beyond just a FICO score, which Upstart views as outdated, as it came out before cloud computing and modern data science. There are a lot more data points available today to guide algorithms to accurately predict whether a loan is likely to be repaid or not. Upstart is especially helpful to smaller and medium-sized banks, which often have outdated technology. Bottom line here, this was a very encouraging quarter for Upstart, and investors are happy to recoup some of the big losses the stock has suffered since October. I do see one glaring problem in Upstart's story. Unlike most cloud computing stocks, which charge subscriptions and thus develop a very nice and predictable recurring revenue stream, Upstart gets paid by each loan made. Its fortunes will rise and fall with lending volumes. So expect some volatility here. As rising interest rates will definitely be a headwind for Upstart. However, the stock has pulled back quite a bit, so maybe a lot of the expected rate increases have already been priced in. Well, that's what I think about Upstart's earnings report right now. But I want to hear from you. What do you think about their earnings report and the potential in the auto loan space? And remember, your comments make these videos so much better. Smash that like button, share this video, and click the first link in the description to get our top 10 stocks list and so much more. We've done the research so you don't have to. Thank you so very much for watching, and I will see you in the next video.